All right, let's jump right in. Is the US economy booming or is it breaking? I mean, the headlines are all over the place, right? In the next few minutes, we're going to try to cut through some of that noise and ask a really big question. Has the economic rulebook we've all been using for decades just been completely torn up? So let's start right there with that huge question, strong or stalling? Because depending on which report you look at, you can make a really convincing argument for either one. And that contradiction? Well, that's exactly what we're going to unpack.
So the first step is just to get our heads around how mixed all these signals really are. It's kind of like the economy is trying to tell us two completely different stories at the exact same time.
And here's the real heart of it. The economy is being pulled in two different directions. Underneath it all, there are these huge, slow-moving changes, deep structural shifts. But layered right on top of that, we've got this daily storm of volatility. So let's start by looking at those deep foundational changes first.
First up is a massive piece of the economic foundation, the housing market. And right now, it's going through something that people are calling the Great Housing Freeze.
And you know, frozen isn't me being dramatic. The data shows U.S. housing activity is at one of its weakest points in history. For so many folks trying to buy or sell, the market has pretty much ground to a halt.
Just get a load of this number. The Pending Home Sales Index, that's the one that tracks contracts signed on existing homes, it has plunged 43.3% from its recent peak. That is a massive contraction. It's a huge signal that buyers are just not signing on the dotted line.
And the data really shows this freeze is happening pretty much everywhere you look. That sales index, an all-time low. Sales dropped again in January, right after a really steep fall in December. Even in the South, which is the country's biggest market, sales are down significantly. And with actual closings also falling, there just aren't many signs of a thaw coming anytime soon.
So a frozen housing market, that's our first big foundational shift. The second one is in the labor market, and it's a change so big we can really call it the new jobs math. Now, to really get this, we need to talk about a key idea, break-even employment growth. It sounds fancy, but it's actually super simple. It's just the minimum number of new jobs the economy has to create each month to stop the unemployment rate from going up. Okay? Just keep that idea in your head for this next slide.
And here is where things get really interesting. Just last year, if you saw a headline saying we added 150,000 new jobs, you might have thought, that's a little weak. But now, with the break-even number way down around 50,000, that exact same headline would signal a red-hot labor market. The goalposts for what a good jobs report even is have completely moved. So what's behind all this? Well, the research points to a pretty simple chain of events. A big slowdown in immigration means fewer new workers are entering the labor force. And if you've got a smaller pool of people looking for jobs, the economy just doesn't need to create as many new positions to keep the unemployment rate steady. Makes sense, right?
Okay, so we've got two huge foundational shifts, a frozen housing market and this new jobs math. Now let's turn to that daily storm, all the short-term volatility that's just layered right on top of everything.
And against this kind of strange new backdrop, markets are getting hit with unpredictable variables from all over the place. Economic data, corporate news, and, politics.
Here is a perfect example of that non-economic uncertainty. This statement from former President Trump about Netflix introduces a political variable that investors now have to factor into their thinking for a specific company. It's just a reminder that not all the news that moves markets comes from an economic report.
And of course, that kind of political headline doesn't just exist in a vacuum. It lands smack in the middle of a week that's already packed with traditional market movers, everything from consumer confidence and inflation data to a massive earnings report from a company like NVIDIA, which, wow, that can shift the entire market all by itself.
And if that wasn't enough to juggle, let's add one more number to the mix. 11. That's how many separate speaking events from Federal Reserve officials are also happening this week. Every single one has the potential to cause ripples in the market, as traders analyze every word for clues about what might happen next with interest rates.
So I have a shifting foundation and a daily storm on the surface. What does this all mean? Well, that brings us to our final section, just trying to navigate this new normal.
And here's the key takeaway. When the foundations of things like housing and jobs are behaving in such new and unpredictable ways, that old rulebook, you can pretty much throw it out the window. In an environment like that, every short-term event, an earnings report, a political tweet, it can feel so much more disruptive because the ground beneath our feet is already shifting.
And this leaves us with the most important question of all. In an economy with a frozen foundation and a chaotic surface, how do we even measure success anymore? The old metrics might not be telling us the full story. And that's the real challenge to think about the next time you see another one of those conflicting headlines.